Thank you very much for joining us in today's webinar. I'm going to go through building a list using the filter functionality within Skaffold, and then what I'll do is I'll pick a couple of stocks from that list and talk about those in some detail. And you can see now that this list has come all the way down to 9 results. So I'm going to save that now. And you'll see that the universe of stocks has reduced dramatically. And I'm going to pull up this particular screen because we're focusing on dividend yield today. This is one of Skaffold's aerial views, and this particular one focuses on dividend yield. So on the x-axis from left to right, we're looking at yield, and on the y-axis, we're looking at the safety margin. Each of these dots represents a company, so that's Nick Scali, that's What If, Integrated Research, Webjet, DTL or Data3, Caledon Group, which is an insurance company, and so on. So what I thought I'd do now is just focus in on one stock primarily, and I'm going to focus in on Nick Scali. Nick Scali, of course, is a furniture retailer. So what I thought I'd do initially is just bring you to this summary screen, which gives you a bit of background information about the business. And the first thing you notice at a glance looking at this screen is that there's lots of green and little red. The only red point or bearish point is that there are less than 5 analysts providing forecasts for this stock. In this case, there's actually 2 analysts covering Nick Scali. The bullish points down the left-hand side are showing that there's high levels of profitability and strong cash flow in the business, which are all key things that we look for. And that, of course, is leading into the A1 score as represented in the middle there. The growth in intrinsic value, as represented by that orange column on the sort of bottom left there, has been quite strong. And the forecast growth is also quite strong at 12%, that blue column in the center there. So let's just step through our criteria that we spoke about and see how this business stacks up. First of all, is it a well-run business? Well, at first blush, it would certainly appear so. And just to take that one step further, let's go to the Skaffold score screen. And what this screen shows us is the Skaffold score across a number of years, 10 years, and you can see that it's consistently been A1 or A2. So that tells you that not only is it looking good today, but it's been well run for some period of time. The second question then that we asked when we were going through our filter was, is the business profitable? Now, to answer that question, I'll look at the capital history screen. You can see that the blue line there is always positive. Now, the blue line represents the return on equity, and it's consistently been in the sort of 30s, high 30s, and so on. So that's a very good thing to have. Now let's just go on a little thought experiment here. Just imagine for a moment that you and a couple of friends decided you wanted to start a furniture business. It's 2004, and between you, you scrape together $7.5 million. Okay, so you can see here, you put in that $7.5 million and you start your furniture business. You borrow just a negligible amount of money, and away you go. Now, fast track 10 years, and in 2013, 2014, that business, which is now got an equity which is worth around about $40 million. It's also earning around $12 to $13 million a year in profits. So on your initial investment of $7.5 million, you're earning 13 million in profits. You've got equity of 40 million, and that's not even mentioning all the dividends that you've been able to withdraw from the business over the course of the last 10 years. So you'd be pretty happy with your initial investment. Now, the whole purpose behind this capital history screen is to give you the sense of what would it feel like to own this whole business for a period of 10 years. It stems from a quote from Warren Buffett, which was that if you don't want to own the whole of a business for 10 years, then you shouldn't own a small piece of it for 10 minutes. And okay, so enough said about that. It's pretty clear that this business has been well run for a period of time. Now, the next question was, is the debt manageable? And I can answer that without leaving this screen. Just by scrolling down the bottom, we can see that there's a small amount of debt, which is these red columns here. But if we go to the bottom, we'll note that the debt is around about 7 million, but the cash is around 27 million. So cash far exceeds debt. So obviously very well, well and truly manageable. So the next question on our list is about cash flow. Is the cash flow strong? Well, this screen here, what we call the cash flow evaluate screen, gives you a very quick representation of how the business is going in terms of its cash flow. Now you can see that blue wavy line. That represents the operating cash flow, and you can see that it's consistently high, and indeed it's consistently above the level of reported profits. We look for what's called the cash flow ratio of greater than 0.8. Now, the cash flow ratio simply represents the operating cash flow divided by the reported profit. And over the long term, the cash flow ratio for Nick Scali has averaged 1.2. So that's well above 0.8. So that's a nice, strong position. We're also, as I mentioned, looking for a funding surplus. Now, that's the green wavy line there. And you can see that other than a couple of slight dips, that it's consistently been in positive territory. So that means the business is generating more cash than it is spending. Okay, so the final question was, is the value of the business increasing? And to answer that, we'll look at the Skaffold line. So this, of course, is your share price chart superimposed over a chart of the intrinsic value of the business. Now you can see that it's steadily grown at 9% over the past 10 years, as represented in that value prospects graph to the bottom there. And it's forecast to continue growing at 12%. So the answer, of course, is yes, it has grown and is a growing business. Now, you'll also note that the price has retracted. It peaked around about here at a bit over $3. This is around about late last year, and then it's come back to today's level of around about $2.50. Now, that this period here actually largely followed some cautious comments by the management when they released their half-year results, and then no doubt Nick Scali has been impacted by the consumer sentiment, particularly following the federal budget. My personal view is that political effects tend to be short-term. You'll see there that the price is getting down towards its 2015 intrinsic value. As you know, we at Skaffold do not attempt to predict which way the price will go, but we look for stocks and we compare them with their intrinsic value. So this is one that's certainly in an interesting situation. So I guess the final thing we want to look at with Nick Scali is indeed the dividend income, because that's what we started with this particular filter. So I'll go to the earnings and dividend screen to do that. And what you'll see is that you can see that the dividend yield is coming in at 5% today. So dividend is forecast to rise consistently over the coming few years. And a 5% dividend, fully franked, represents a grossed up yield of 7.1%. The company is typically paying out 70 to 80% of its earnings as dividends, which is a sustainable level. So if yield's what you're after, then there's certainly some attraction to this stock.